observation, rules, conditions, and targets. These are the four things you need to look if you want to become consistently profitable trader. Without these, the chances of blowing up your account will increase dramatically. So if you are investing your hard-earned money, then you should have strict rules for that. You shouldn't be just entering the market without looking at it. You shouldn't be clicking buy or sell button without looking at the consequences. What if the market goes against you? So guys, if you want to skip this part of the video, you can skip it to the timestamp, as I want to talk a bit before I start my analysis. So first, in trading, you must observe the market first, then look for the conditions. Once you see the good condition, then you should have your rules there and see all your rules are met. If all your rules are met, everything is checked in your rules. Once you have that, then you enter. Once you enter the trade, you should have your targets, you should have your stop loss, and you should have your take profit there. So you need to have these things. You must follow these in your trading as you're investing your hard-earned money. This is not a gambling. I want to show you two trades I have taken yesterday. One of them I have sent in my priority group, and the other one I've sent in my Telegram channel. So let me show you that. Right here, we entered this trade yesterday in my priority group. As you can see, the market hit our take profit and then falls back down. But our target has been hit right here. And as you can see, this was 74 pips position. And my risk was only 1.5% for this trade, as I saw the potential in this trade and it was more likely to hit my targets, as I have already shown it to my priority members why I'm taking this trade and what factors I'm looking at to take this trade. So this was a one winning trade we have taken yesterday, and let me show you the losing trade we have taken today in the morning. That was a stop loss hit today. Let me show you that. This was another trade we took today in our Telegram channel. Right here, as you can see, it was 61 pips position. And the other trade, the winning trade I've taken, was 74 pips take profit. And as you can see, my take profit was more than my stop loss. Even though I have this losing trade, I am still in the profit, as for that trade I have risked 1.5% of my risk balance, and for this trade I have only risked 0.5, less than 1% of my balance. With that, I made more money in my winning trade than I lost in this trade. So this is how you should take your trading at. You shouldn't risk every single thing, whole of your account balance, 50% of your account balance, because it's your hard-earned money, and that will lead you to big amount of stress, which is not worth it. So if you are trading in the live market with your live money, please follow the proper risk management and please respect your lot size and always have your stop loss and take profit there. So that is all I want to show you guys. Let's move on to our analysis with natural gas, gold, and crude oil today. Okay, right here with natural gas, what do we have here? The market ended up pushing down. It was consolidating right in this area. We did not get any type of buying entry reason. That is why there was no reason to enter at this minor support, as mentioned in my previous video. This is not an engulfing candle. For the candle to be engulfing, that must engulf the previous candle fully. As you can see, this candle is a bigger candle, but it did not engulf the previous red candle. The market ended up pushing down. We have a big waterfall. We did not get any sort of entry reason at this major support as well. So there is no point of buying at this point. Even though the market is falling down, the mistake the traders do, they see the market is really low, they start buying. Let's say you start buying from here, then it's pushed down, you start buying at this level, then it pushed down even further. You keep on buying and buying and buying until your account balance really low, and that is not recommended at all. There is no point if the market breaks below your support area. Technically, if the market breaks below the support area, that area then becomes a resistance, and there is no point of entering buy trade, even though you see the market in an oversold situation. This is not a buying signal. This is just an oversold situation with this impulsive move, and it will correct itself with a pullback. And how to trade pullbacks, as I teach you in most of my videos, just pull up your Fibonacci tool right here till this previous level of support right here. This support has now turned into resistance. So at this point, I will not enter any buying trades. I will only look for a push up, pullback to this 50% retracement till 25% retracement. So this will be my sell entry. If you want to enter an aggressive way, you can enter right after the hit of your 50% retracement or this zone, which I call a buffer zone. So once you hit it, either you can enter straight away with an aggressive way, or you can enter in a less aggressive way. Look for green candle and then bearish engulfing candle from here, and your targets will be 1.618 retracement right here. We had a really nice condition in gold. We have a really nice pullback entry in gold using Fibonacci, which I'm going to go through next. Check that out, as well as that will be beneficial for you to understand the entries I'm talking about. So at this point, this is the buffer zone at Owanda. I'm going to go through currency.com in a moment, which is 7.762 that goes up to 7.928. So at this point, not buying. This will be my target. If you have a push up, if you have a retracement, that is the zone which is 7.687 that goes up to 8.083. This is my zone from where I look for sell entry reason. If you do not get in this buffer area, this is a full zone. I will look for my sell entry reason only. Once we have that, this will be my target. We might not get any retracement. If we do not get any type of retracement, then this is the next zone I will look for my buying reason. This is a counter trading zone. Once we hit this zone, which is 6.427, that goes down to 6.156. This is the zone from where I look for engulfing candles or a double bottom entry pattern. Once we hit this zone, this is a major level of support. As you can see, the market pushed up right from here, push down from here as a resistance, right here, right here, right here. So this is the major level of resistance. Let me readjust this zone right here. So this is the zone now. It's 6.488 that goes down to 6.141. You can look for your buying entry reason if we have a good push down at this point. We got this zone as our trend continuation zone. We can expect a push up and then push back down. So market is bearish, not buying at this point. Right here on Owanda. So what do we have? We have this zone has been broken. We did not get any sort of buying entry reason at this minor support. We did not get any buying entry reason at this major support, even though the market just have a waterfall and ended up breaking below this zone. Now this zone was previously a support, will become a trend continuation zone, and that if we get a pullback to this zone, I will look for either as an engulfing candle or a double top entry pattern, or I will look for a pullback with my Fibonacci tool right here. As you can see, we have this 50% retracement to 25% retracement. This is what I call the buffer zone. That is 7.511 that goes up to 7.770. This is a zone you can enter in an aggressive way. That is the hit of this zone with a limit order, and your target will be 180R from here, or the 161 retracement, which is 6.330. So at this point, the market is bearish. Then we have a next major zone right here. Let me adjust that a bit. So this major level of support is 6.354 that goes down to 5.859. That's a big zone we have right here. So this is the zone I will look for my counter trades, either as an engulfing candle or a double bottom entry pattern. So at this point, just keep an eye. You already got your Fibonacci levels. Look at the retracement or a pullback to this zone to take your short trades with a good entry reason. Okay, let's check gold. Okay, let me show you what I've said in my previous video so that we can take it from there. Right here we have this next minor level of support, which is 1811 that goes down to 1804. So if you have a good entry reason with a good engulfing candle, then this is a zone I will be looking at to take my counter trades, counter buying trades only with a good entry reason. Okay, awesome. So as you can see, the market hit this zone. This was a minor zone, and here you can see after hitting of this zone, we got $18 move. As this is the minor zone, that was only the move I was expecting. I did not buy here because there is no reason for me to buy at this point. We do not have any kind of entry pattern, but it did give us a bounce. Instead, I was looking to sell this market. Let me show you how you could sell, how you can use your Fibonacci, how you could use the pullback. As you can see, I have some of my friends, they was telling me that market is really low. You should start buying at this point. I told them that I will only look for a pullback to take sell trades, and how to trade pullbacks. Let me quickly show you using my Fibonacci tool so that you know how to take that trades. Let me show you the previous entry we have taken. Okay, right here, as you can see from this major resistance, we had this big impulsive move. Instead of entering directly, I entered like this. I was waiting for the market to give us a pullback, a breather. Once we have a pullback, the aggressive way to enter right here, the hit of this 50% retracement, and 161 would be your target, which is 1852. So let's see what happens. Right here, right with the next candle, the market execute my order, and right after that you can see we have a big red candle that hit my target right here. So we have a similar situation now. As you can see, market has now pushed down from this zone. At this point, I am still not buying. As I've clearly mentioned in my previous video, I won't buy even though the market is pushing down. I will still look for my Fibonacci tool right here. Now I have my buffer zone right here. I have not entered this trade, but let me show you. I have entered this trade right here, but not this one. But we had a similar situation. Now I want to see a pullback right here, and I want to see this as my target. So let's see what happens. Right here, we had a pullback in my buffer zone. So my entry would be triggered at this point. As you can see, the market pushed up and then start pushing down. And by the way, this was not my stop loss. My stop loss is always 10 to 20 pips above this Fibonacci zone. So at this point, the market has hit my 161 retracement, which is my target, which would be my target. I have not entered this trade. So at this point, what you need to look at, you need to see we are now at the minor level of support. I'm expecting a bounce, but not a big bounce from here. If you look at the 1 hour time frame, if you get a move like this and then you get a green candle, then you can take your targets 180 are above from this zone. Now on 4 hour time frame, if we have a close of this candle and then we get bigger green candle, that should be lower than this previous wick, and it should be a green candle. If we have that, then that would be my entry 180 above and stop loss 180 below. And let's say we do not have any sort of entry reason, market push down to the next level of support, which is 1804, then I will look for this pattern right here as well as a double bottom or engulfing pattern. If you do not get any entry here as well, market at a waterfall, then the next support I'm looking at is 1788, from where I will look for my entry. So have these zones on a chart. At this point, look for a good buying pressure to take your long trades. Okay, what do we have? Let me show you what I've said in my previous video. This is the possible formation of another top. So I want to see the market to push till 124. Once we have a good push to this level, and from this level I will look for a nice bearish pressure, a bearish entry region. Which awesome. What do we have now? As you can see, as mentioned yesterday, with experience I was telling you, I knew that that could be a double top move, and that happened with a nice pin bar. With that, what would be the targets? If you have taken this trade, then congratulations, you have made a good money. Right here, the ATR of this candle is 1.6. Let's do 2. So here you can see the target has been hit successfully. If you would have entered on this candle, then that would be a nice double top move. Now what I'm expecting from the market, now if what happened is, once we have a double top move, if we have a push down now and break below the neck, okay, this is the neckline of my double top, which is 119.23. That goes down to 118.436. So what happened is, if you have a push down and breaks below 18118, then we can expect a push up and then push back down to 116227. That will be the retest of the neck of this pattern. That will be the case once we have a break and close below this pattern. At this point, not buying, is still bearish. Just wait for the market to break and close below 50 EMA for the further bearish confirmation. I won't be buying at this point. My target would have been hit at this point. I have not taken this trade as well, but my target would have been hit here, and just wait for the next bearish confirmation with the break and close of the next candle or this candle below 50 EMA, and that will be the next target for you. So that's all for now, guys. That was a really long video. If you have made it to the end, then please do not forget to hit a like button for me, and make sure you hit the subscribe button so that you can receive videos, analysis like this every single day. I hope you trade green rest of the week. See you guys in the next video. Till then, take care.